Hey guys, welcome back to Charlotte Mortgage Insights. Today we are joined again with Stephen Noer of Alcova Mortgage and Chris Hara of Enact MI, which is mortgage insurance. And when you talk about a mortgage, we've got to talk about interest rates, we've got to talk about mortgage insurance. And ironically enough, MI is one of those things that confuses a lot of people with thinking you've got to put 20% down. And in a conversation with Stephen the other day, we were talking about the idea of actually getting a lower interest rate if you have mortgage insurance. So we already had Chris teed up to come on the podcast here for our YouTube channel. So we thought we would dive into this one. So Stephen, how is that possible to put down less, have MI, and get a better interest rate?
Yeah, and I don't want to get into the technical weeds, but it's just one of those people assume if they put down 20%, they're going to get the best interest rate. And in some situations, that might be the case. But the way that loans are priced and the way that the margins work in the secondary world, if you put down 15%, you're going to have mortgage insurance, but you're also going to get a better interest rate, depending on your credit score and a few other factors. So when someone calls us, we like to talk about the pros and cons. And mortgage insurance is a hot topic. A lot of people are just not happy to even talk about it. But when they understand the cost basis and the recapture of, return on their investment as far as X money down or Y money down and the payment that's associated with that, people get excited when they don't have to empty their entire savings account just to acquire the property. And there's lots of different loan types. And so FHA and USDA, they have their own government mortgage insurance, but we love working with Chris. He's a local guy and he has private mortgage insurance. And, there's a way that you can actually finance the mortgage insurance, which is going to, essentially eliminate it so that your payment goes down. So, Chris, break that down for us, because most people have no clue that you can actually do something that as cool as that.
Oh, absolutely. And the other reason why you may be able to get a better interest rate on that file with private mortgage insurance is because, again, we're allowing you to buy that home with less than 20% down. We can do loans as little as 3% down. But again, the reason why you're able to get probably a little bit better rate is because I'm protecting the lender for part of that risk of putting less money down. As Stephen said, especially on that 15% down borrower, there's a lot of options. Most people just hear of monthly MI all the time, thinking, oh, that's just that extra little payment in my PITI. But again, there are two different other products available that Stephen is well versed on. One's a single premium and one is a split premium. So the single premium is just basically saying, instead of collecting that monthly premium, and let's just say the average homeowner's in there for 5 years, instead of just making that payment every month, you can pay one single premium up front, either through several ways of paying for that. But Stephen and I worked together on financing the MI, because that will always give you a lower payment than doing monthly MI. And more importantly, it may also help you save some money on how much money you have to bring to the table. So a single premium, like I said, it's a one-time premium that you pay. A split premium, similar to FHA, where FHA collects 1 3/4 up front on every single loan for their private mortgage insurance or their MIP. A split premium basically is saying, I'm going to be able to collect anywhere from 0.5% up front all the way to 1 3/4 like an FHA loan. The more percent that you collect up front, the lower that monthly MI is going to be. So there's a couple different ways of structuring that. It's ironically one of the fewest used products out there. No one really talks about split premium. And now that we're sometimes back and forth where we see seller concessions being offered up, sometimes there's enough seller concessions to be able to pay for a single, but sometimes not. And I always say, never leave any money on the table, especially if it's coming from the seller or the builder. And basically, hey, put it towards a split premium, because you can do that in 25 basis point increments. And the more you collect up front, the lower that monthly is going to be. And at the end of the day, it's going to help them on the affordability side to help them lower that monthly payment.
Okay.
Chris, those were all great points. And man, thank you for taking a deep dive in that, because this knowledge just isn't out there. So we want to make sure that everybody out here watching the channel is empowered. And one thing that I wanted to bring up is mortgage insurance is normally viewed as part of your monthly payment. But what Chris was leading to is it can also be structured as a closing cost. And I know I've seen it on a lot of deals right now. And Brian, I'll kick it to you. How much closing costs are getting covered right now by sellers?
A lot right now. With the market softening a little bit, almost every deal that we're doing has seller paid closing costs of some kind, whether that's on the existing side or certainly new construction, right? The builders are offering all types of incentives. But if you got a house that's been on the market 45 or 60 days, that seller is willing to pay concessions to get that property moved. So yeah, absolutely. And that MI, as you alluded to, can be paid by the seller as part of those closing costs. So a lot of the people that we're talking to right now watching this video, PMI, like I said, people don't want it, but sometimes they don't even have to pay for it. You know what I mean? So,
and that's the most powerful thing, is just understanding that just because in years past and just because somebody told you it's a terrible thing, do your own research. And that's why this channel's here, is to educate and empower. And it may not be right for you, but somebody out there is going to hear this and get a deal structured by this group of professionals that's going to be something that they're going to tell their friends and say, man, you won't believe how PMI helped me. It's incredible. The seller paid for it. My payment's lower. I got to build the fence that I needed. My wife is happy. And wow, I mean, who knew this was possible? So that's why that's the whole reason we want to bring this information to the masses right now.
Yeah, absolutely. So at the end of the day, there are options, right? So if you're watching this video and you want to see what your options are around your mortgage financing and PMI, reach out to Steven. All of his contact information is below. And if you want to structure a great deal on a house, reach out to me and my team. We will consider all of the options, get some seller concessions paid for you to pay for your PMI if you need it, and we'll take it from there. Reach out. All of our contact information is below. Chris, appreciate you coming on today and talking about PMI. Guys, like and subscribe to the channel if you haven't done so already, and we'll catch you guys in the next one.